What you're watching is a 30-minute chart. In fact, we'll drill down to a 15-minute chart of Netflix as they reported earnings on April the 19th at the close. So we're using the on-demand feature in Thinkorswim, and you can see the time up here is right at the 4 o'clock hour. And there we go. They just reported earnings. A big drop initially, then rally back. And then things get really ugly really fast. And there we go. So right then and there, you're at a 1 standard deviation move, and it gets worse. Now, keep in mind that during this time frame, I had sold naked calls and naked puts, which is an option strategy called a Strangle, at the 250 strike. And we have $50 to go before we hit that. But you'll see things begin to unravel pretty quickly here. Now, the call side of the Strangle trade is pretty much worthless at this point, but the put side is gaining value, which is something that I do not like. When you're selling premium, you're looking for the least amount of move after earnings, so that way you could experience the most IV, implied volatility crush, IV crush. And you can see now we're only about $39 away from my strike price. And it's at this point you start thinking about what action should I take. Do I short the stock to cover my position? Then I risk a whipsaw or knee-jerk reaction back to the unchanged or to the upside. The news is coming out about the company's subscriber growth, not good. Earnings, not good. Revenues, not good. All the news is bad. The PE on the stock at this point in time is around 34. Currently, I believe it's at around 17 at the time of this recording. Now, the reason why I'm doing this video is that we have earnings coming up next week, this coming week, and I plan on trading the options yet again. You see, the markets are digesting. They're trying to rally the stock back. They're digesting the news, but they're not liking what they're hearing. Now, we could fast forward here. Now, at this point, were we to close out the following day at this level, 288, I would still be profitable on the trade by a wide mile. But this is just the beginning of the selling. And the purpose of me illustrating this very nasty and brutal sell-off is that while selling premium in options is a very profitable and consistent way of making money, where you go wrong is when you get too confident, you get too big, you get too greedy collecting those premiums, you get a little bit too close to the strike price. Now, the market maker expectation was at about a 50-point expected move, I believe, because it closed at around 350. My strike was down at around 250. I usually like to double up the expected market maker move just to be very conservative. And we're going to take out the session lows of 280.92 in about the next few seconds. And there we go. So support's been broken. The shares are now in free fall. Again, this is after hours on April the 19th. That's the last earnings report. So what I'm going to do now is I want to fast forward to the next morning. Okay, now here we are immediately before the open. The following morning, you can see the devastation that had occurred the night prior. It is now 1 minute to the opening bell. Pre-market, the shares are trading at 244.8 after closing at around 360 per share, 350 per share the night before. My strike price has now been breached, which was at the 250 strike. Now, remember, I'm going to collect 100% of the call premium. So while the puts are under pressure right now, I could still salvage this trade as long as we don't get another big move, because I was very conservative with where I placed my strike. Now you can see RSI is very oversold in the 15-minute time frame, below 17. If you take a look at it on a 30-minute time frame, also below 17. So you would think that we may get a bit of a rally here. The market's just open. Let's go to the 15-minute chart. Now they're trying to keep it together, and there we go. It breaks from here. Now we're at new session lows, and you can see the volume bar here is tremendous. We are leaning into the third standard deviation Bollinger Band on a 15-minute time frame, but really nobody's paying attention. Institutional investors just want out of the stock now. Keep in mind that Netflix, up until this point in time, was a high-flying growth stock, and now they're seeing subscriber count come under a lot of pressure due to competition. Now, if we pull back, let's go to a weekly chart, we could see that where we're trading at current had some support back in September of 21. Let's go back to the 15-minute chart. So they're trying to defend it here. Again, trying to rally it back. But every time they rally it back and it fails, confidence in the shares being able to rally diminishes dramatically. And now you can see we just broke the 240 mark, hitting the lows of the session. Let's show down to a 5-minute chart. Get a real close-up. Trying to hold 240. But what was support has now become resistance. So at this point, I was rolling down the call side of the Strangle trade, trying to make up for some of the damage that was done. You can see that 240 now is in the rearview mirror. RSI on this 5-minute chart is at around 10 and declining. Now, in hindsight, what I would have done with this trade at this point is after the first hour of trade, I would have rolled down my calls to the 250 strike, which is exactly where my puts were, and that would have changed the trade from a strangle to a straddle, straddling the 250 strike. Or I could have just booked a loss at this point, and now you can see that we're breaking really, really hard. Look at the volume bars. These are institutions. These are the big boys, and they want out. You can see every time there's a bid, the bid gets taken, and more shares hit the market. So the reason why I'm doing this is to refresh my memory of the events of that last earnings period, to reinforce how conservative I really want to be with Netflix, and for that matter, any other earnings trade, because they're what you call a binary event. You really are trading into the unknown. And as an options seller, I am the market maker. I am taking on undefined risk. And that is normally a consistent way when you're using probabilities of making money. However, you do have your 3 standard deviation moves, which is ultimately what Netflix turns out to be when all is said and done. And if I were too big in the trade, I would have gotten absolutely and utterly annihilated. It still stung, don't get me wrong, it still stung quite a bit, because up until that point, I had used a very, very conservative strategy, so I thought. I'll be even more conservative this time around, even though the probability of another 3 standard deviation move is highly improbable. Well, we're in a market environment right now where we want to be very careful. This is not a healthy market. You can go either direction at any time. Netflix is cheap at current. However, if they report significantly bad earnings, well, overnight those shares could become very expensive yet again. And you can see that they're trying to defend the share price here. It's not gonna work out. We're about to break 230. The amount of institutional selling here is just absolutely incredible. They're trying to defend 230, but to no avail. It just broke it. Now, again, this is the morning after earnings. And if we fast forward, let's say a month out, this is the 20th. Let's go to May 20th. You can see that the shares on this morning were set to open at $186.79. So a tremendous amount of technical damage. Here's the chart. The shares were at a high of $700.99. And even going out a month, the shares had yet to have a measurable counter-trend rally. Ultimately, the lows of the share price was 162.71, and that makes for a decline of 50.89% from the close on the 19th of April 2022 to the lows of May the 12th, 2022. Now, as we proceed into earnings this coming week, the shares of Netflix are looking relatively good. The stochastics, really nice, like a coiled spring, an inverted head and shoulders setup, if you will. Great consolidation here. A few months of consolidation. We have been trading Netflix frequently, selling premium on it. We've been doing very, very well because the options are very expensive. They've never gone back down below their historic IV percentile of 50%. In fact, we just had a strangle trade, a weekly strangle trade expire this past Friday. Now, while this looks all well and good, and it appears as though we're going to rally here, we don't know. You could see some great setups before an earnings report, but once earnings are released, let loose the dogs of war if they disappoint, especially in this economic environment. So while it looks as though the share has been beat up and they should be cheap, and technically they are cheap, they can get beat up more. Who would have thought that from their all-time high, not even a year ago, we would have dropped 77 1/3%. So while Netflix is a great trading vehicle, the purpose of this video is to instill in those folks trading Netflix or any other earnings trade using undefined risk strategies such as straddles or strangles. Stay small relative to your overall portfolio and get as far away from the closing share price as possible. Try to use a 2 standard deviation move. In this case, this is a current chart. A strike, if we're going to trade the front week options, a strike of 237.60. You round that up, of course, to the nearest strike. In this case, a 240 strike to the call side and a 150 to the put side. And you may think, it'll never, ever get there. I can make a lot more money just simply using a 1 standard deviation or using the market maker's anticipated move of the stock, and that's not posted yet. You're rolling the dice, and you may win on this one, but ultimately, down the road, the probabilities are going to catch up to you, and you're going to get pinched. So if you want to trade with us, you want to see what strikes we establish and what expiration date we select for the Netflix trade, for Tesla, for Microsoft throughout this current earnings season, sign up for the 14-day free trial offer to the Contrarian Trader. Use the link below. We go live each Sunday and Thursday night, so please join us for Sunday Night Futures Live. Subscribe to the channel. Click that notification bell so you get notified when we go live, 6 p.m. Eastern Standard Time. Click the like button, share with a friend, leave a comment below. If you want me to review one of your symbols this evening, please leave a comment below what your symbol is, and if you're bullish or bearish, and any details you think might help with our analysis. And we'll do that live tonight. Again, 6 p.m. Eastern Standard Time. Everybody have a profitable trading week. Be well.